What is the biggest financial myth in the business world?
Taxpayers or businesses assuming that they can show a lot of losses, which makes them pay the least in taxes.
If a business is growing and is still struggling, what is one thing you look at?
I would look at the cash flow to see where the money is going. If it's not going to their pocket, then it's going somewhere where it shouldn't be, or if it's not tax deductible.
What is one weirdest tax saving strategy which actually saves money?
So maybe sometimes a cosmetic change is assumed as not tax savings or not tax deductible, but in fact it is. There's a ruling with the IRS once where a swimming pool was allowed as a tax deduction for medical purposes.
What is one financial habit that separates from a successful business to from a struggling one?
Business owners have to understand their numbers, have to understand what these reports that they generate means. For them, having a financial knowledge of their income and expenses helps them see where they lack or where they thrive.
If I have to track, like as a business owner, one number daily, right, what would that be?
I would track my sales revenue because sales always tells you the trend of how the day has been, how it should have been, and why it's not that way, or how it went despite the forecast from before.
So let's say, I have 5 minutes with a CPA, right? And I want to ask that one question that can really help my business grow. What that one question would be for all small business owners.
How well my business is doing, and is there a way I can make it bankable?
Love that. Love that. Okay. So welcome everyone. I am Prati Kaufman, host of Small Business Marketing. Today I have somebody who has been very instrumental in my business personally, like my business growth. And that is my CPA, Jaye Subramanian. She was the first one, I know I'm going to introduce her in a bit, but she was the first one who told me that, Prati, if you want your business to be bankable, right, you have to make profit. And that literally changed the trajectory of how I have grown since then. So, welcome, Jay.
Hi, Prati. Great to be
Jay, I'm
here.
so happy to have you. So, let tell people a little bit about, a brief and where you practice and how you help your clients.
Okay. I'm a certified public accountant and an enrolled agent. I'm also a certified acceptance agent with the IRS. My practice is in Glastonbury, right off Hebron Ave. We are very easily accessible through Zoom, over a phone call, or in-person appointments. One of the things that I feel like in today's world, people have to stand out when they're preparing taxes is to just not merely prepare a document which can be done online by the taxpayer themselves, but also see those tax returns, see those numbers, and think beyond just the numbers that they see on a paperwork, which is filed with IRS or any state authorities. So our goal has always been to make the businesses and the taxpayers understand their financial structure, where their strength is, where their weaknesses are, and how we can turn those weaknesses into strength in the future coming years. We ensure our business owners can take advantage of their business, see it as an asset, and also exit out of it as a very successful entrepreneur that they wanted them to be. So,
Perfect. And by the way, guys, I know people are listening all over the world. Wherever you are, Glastonbury is in Connecticut, in America. Just want to mention that because we are so used to living here that we think everybody knows where we are. And but the simple foundation today, what we are talking is a simple foundation of a business, right? Financial foundation. How to build a very strong financial foundation for success so that, like Jay said, you can exit out, you can decide how you want to grow, you can decide where you are in this space and how you can keep moving forward without the stress. So what we are talking about will be valid no matter where you are, wherever you are as a small business owner and you're starting out. These strategies will help you immensely if you follow them. So from what I know, right, most of the time, even when I had a job, I thought my CPA was just to prepare the taxes, right, and get me the biggest refund.
Right.
And then I start the business and I meet you, and you kind of change because you are a partner. No, a CPA is a partner in the scaling of the business and the profitability. So let's talk about that a bit, like how a small business owner can think of a CPA beyond just a tax preparer, and what CPA can do to help small businesses grow and scale.
Okay. As someone who has seen through numbers and who looks at this, day in and day out, and with different businesses, we understand businesses a little differently from a different perspective than the business owners themselves. So a CPA should be able to tell you if you're able to take advantage of your business. See it as an asset. Is it saleable? Is it marketable? Can I take lending from my business? Can my tax returns be favorable in such a way that I can sort out investors to scale up my business? These are the main predominant questions CPA can help answer when it comes to small business owners or any businesses who who wants to take advantage of their business, and they should.
Yeah. So what you're saying is the CPA can look at a business and see more than just, deductions, right? So
Correct.
what's different with you? You asked me, right? Like, what's your goal for the business? Where you want to go with it? And I had goals to grow faster. And then you say, okay, then let's, create this profit, and this is what's going to get you to the, a credit line,
Right.
which kind of established. So guys, if you're a small business owner, if you're CPA, it just doing tax returns with the highest deduction, run away. I swear to God, like run away, right? You want a CPA who will ask the right questions about your business growth and then make a plan based on that, not just give me the numbers and I'll just get you the best most deduction, right? I think that's what it is. You can partner with it, okay? So when you're starting out as a business owner and you're growing, what are some of the blind spots we should be aware of which can cause failure and stagnation in business?
Uh, one of the big things that I can think of is business owners not realizing that there are grants or other lending opportunities that available that they can take money from someone else to grow their business rather than taking their savings and putting it back into the business. That's when they're always struggling because they're always looking at their expenses and they are not happy or they are scared to grow beyond because that would also involve spending more, which is again their own money. Instead, have a favorable tax return, have a favorable financial numbers, which would help you get lending from someone else, bring in an investor. Now, this could make you expand at a lot more ease. Go to a different location where the revenue would automatically pick up than where you are right now. Be able to afford that one extra employee that you're not able to today because you're always in between stages. That's the biggest struggle that a business owner has to get out of, the mindset that they have to build, saying that it doesn't have to be always their money to grow. They can get money from someone else, and they need to be able to show or forecast their numbers in such a way that it can be possible, and a CPA can help them do that.
Yeah, I mean, you have hit the nail on the. So, guys, just so that you know, I started my agency about 5 years ago. And last year, I was able to buy a kennel with my husband. And this year, right, I'm in the process of buying another business, and it is seller financed business. So there's so many ways to do it right if you have a business that is making a profit and not always in loss. One thing I do want to add to that, the blind spot, I think most business owners don't think about building a relationship with their bank. It will change dramatically your business because they can do things if they know you well, which you can't get it unless you know somebody. You can get a straight no. So, do you want to say something about that? Because I think to me, I found this really valuable to build relationship with banks.
Absolutely, yes. So the banks these days, based on the economic growth and all that, the banks have come up more. I mean, as much as the SBA or any of the government lending that's come up, because the banks want to grow with you and they want to be proud of growing small businesses like yours. So when businesses just switch from one bank to another for simple reasons every single year, you're not establishing that credit worthiness with your bank for them to even know you. The history is never built. But the moment you stick with the bank and go to the bank, visit the bank, meet the manager, and be involved in the community, that would give you such, appearance and also that transparency that people realize you're there. You're there for them. And the banks would know that you really want to grow. So you're here because you care about your business. So the banks would also realize that I would help you grow your business. It's it's
Yeah.
all win-win for everyone at that point.
That's perfect. So one of the biggest struggle for small businesses, Jay, you know that, right? Is the scaling. When to scale, when to pause. And you have to know, right? Like when to pause taking on clients and when to kind of ramp up and then when to pause because there's a method to this madness,
Correct.
growing. You
Correct.
can't continuously grow because it will burn you out. But you also cannot be stagnant all the time, then you have nothing to show. So how do you how do you help business owners decide, okay, it's time to grow and then stay where you are for a bit before you grow again?
True. Okay. So number one, watch the market. Number two, watch the economy. When a business is down, and if your business is down in the industry while the other businesses are thriving, then you're not investing in the place that it needs to be invested. Spend those expenses which is not getting spent properly or in the right place. And then thirdly, meeting client expectations, which in all grounds is the number one priority. A client comes in or a customer walks into a door because they have heard great things from this place or they want to give this place a chance. So when that is your business, then you need to be able to keep those doors open, keep customers coming in, and have these customers who have walked in refer more. So meeting client expectations, meeting that one client expectation may give you 10 clients more. So in order to meet that client expectation, do I have my resources rightly aligned up? Do I have the right package and support? And do I have the right time? Do I allot the time for my business at the same time allot the time with my team in order to ensure that every single one who walks through the door is satisfied and they walk out and bring four more. So
Yeah.
when a business is not able to scale up, that's probably because they're not meeting client expectations, or the first client who walked in with such hope and was happy is not that love and dedication for this to this business is not reciprocated by the 10th person who walked in. So meeting client expectations, in my eyes, should be the first. And in order to do that, you should be able to resource well and have a strategy, have the processes and procedures properly lined up. That way, you can continue to have keep the doors open.
Yeah. And from my personal experience, I would add that, to Jay's point, that you need to really service your existing clients. So there are a lot of times in my business, I have paused on taking on new clients because that would have meant giving less to my existing clients, and that is non-negotiable. I will not compromise on the quality that I am providing to my existing clients for new clients. I would rather not take on the new clients. And you have to know that if you do too much and you're going to burn out, then you're not going to give your best to the existing clients. And to me, that's a big no. Like when I feel like a burnout is coming, I pause taking on clients and I just work with what I have. And like you said, have the resources, prepare the resources, have the teams, hire the right people so that I can expand with ease. So that is one thing I would definitely add, that pause when you feel the burnout, when you feel the stress. No, don't do it because that will backfire no matter what. So my next question is, still again about the growth, right? One of when to scale. That's again, it keeps coming back. Yes, you can serve your existing client and all right, that's great. But when do you know, right? What numbers you can see and you say, okay, I really need to go to the next level, but next level will require this much, of course, reinvestment or whatever that is. What do you look at to advise clients, okay, you're ready for the next level of growth?
It's Many times, the reports that we generally, in general, look at are the three of them: the cash flow statements, a profit and loss statement, and a balance sheet. The cash flow statement clearly says where the money has come in, how much money has come in, how much has gone out, and where it has gone out. And the profit and loss statement helps analyze to see this is how much in revenue or sales I'm making for the year. And these are my expenses. And what's the proportion of my expenses to my total income? Out of those expenses, how much of those expenses I definitely cannot avoid, or if they are direct in nature that I cannot run this business without. How much out of those expenses are some that I could possibly shop around, or I could probably do some kind of a cost reduction strategy on. And then a balance sheet would tell us, how much is our debt to income ratio, how much in assets do we have that we can take advantage of, an inventory, accounts receivable, or how much out of those accounts payable can I extend to the point that I will pay on the last day, take advantage of the 45-day or a 60-day payment cycle than just paying them instantly. So that would help me hold more into my pocket to make a decision that could possibly change or grow this business at a more positive angle. So
Yeah,
different reports say different things for good reasons. That's why they're all different reports. A good accountant or a CPA should be able to sit with you and go through these. And some of the times, the businesses also need to understand that they have to keep their books in order to be able to read these reports on a more frequent basis than by the end of the year. When at that point, it's the next year, and there's not much you could do on a year that's already over. So having constant communication with a good accountant helps read these reports and know when exactly to scale up or how much I can take advantage of my business by
yeah.
being vigilant on their books.
So basically, guys, in nutshell, what it is, you gotta make friends with your CPA. That's it, right? There is a whole thing that when you're starting out, you shouldn't hire a CPA, and I've heard that many times, but I am totally against it. Personally, I think as soon as you're a business, you should partner with somebody who can help you. That is one key thing about your business, and you want somebody to advise you correctly, and you should partner with somebody because these things what Jay's talking account, like everything really goes over my head most of the time. So I'm like, don't do it. Like just have the expert take care of it. My expertise are not in that. I'm going to do the like, let me make the money and let me make sure like I do what you're asking me, but I am not going to get into like all of the maintenance part and all. It's a lot of energy draining. So unless you truly enjoy it, just find someone who can really help you and really collaborate with you. Have more of like, okay, let's look at it together and let's see what we can do together, rather than just like, oh, give me the numbers again. I'll come back to it again. Any CPA who is just asking you for give me your books and I'll just do the taxes. Don't ever work with those CPAs. Women business owners, especially. Oh my God, right? Let's talk about the idea of taking loan. You have no idea how many business owners I work with, and they all putting their own money. And you ask them, go take a loan, they freak out. So I mean, for me, I'm able to buy a third business because I take business loans. Like, there's no way I'm going to put all my money into all the businesses. Like, business is making money and it buys another business and I get more money and I'll pay them back, right? Like, that is a thing. But again, you were instrumental in creating that mindset. Like, it's okay to take a loan. Like, we don't have
Right.
to be afraid of taking a loan. So let's talk about taking a loan versus investing your money or finding an investor, right? How how when is what needed, kind of like what stages of business would require these three different things at what time?
Okay. So just as a background, when you're calling about taking money, taking loans, what you're doing is you're creating a debt. So which the business have to pay back. When it comes to investor money, what we're creating is an equity situation where you don't have to pay back the money, but at the same time, the equity investor is expected or promised a return on their investment. So or expected that the business would grow eventually, and when they sell their share, they would be making good money. Then there are benefits and there are risks with all of them. When it comes to debt financing, which is in other words called taking loans, the ability for the business to pay that loan back is the substantial, good and the bad thing, which would lead that business to a more positive or a negative situation. So the reason number one is only taking as much loan as needed and not overstepping. That's the biggest hurdle that the businesses don't realize they will face when it comes to the debt situation. You go and ask for a line of credit, the banks would be very generous. They'd offer 100,000, but you may not need $100,000. So take only as much as you need because this is a line of credit. This is something that you can pull from if you ever need it. So taking that money enough that you're able to afford that repayment back as scheduled would make the business more stronger when it comes to the credit score situation, which would allow the bank the next time to just not offer 100,000, but instead 200,000. So
Yes.
grow responsibly and grow gradually. Just because there's 100,000 coming in, I only need 40. I'll take the remaining 60 and go on vacation. Well, that's amazing. It's a great time. You did spend time for yourself. But if you never needed that $60,000, now you have to pay back 100,000. Defaulting
Yeah.
that would get you to a bad credit score situation. And the next time you go to the bank and ask for money, they may not offer you more than 30. So, having a more stable ground towards taking loans, taking money from someone else is, that's something to be watched over. And bringing in investors is amazing. They come in with an expectation. They come in with lots of hope, and they also may come in with a lot of talent. So choosing your investor sometimes may actually be a great advantage for you than the money that they are bringing in. If it's someone who is amazing with marketing, someone who is amazing with a different operational standpoint, then that's something less that you have to do and let them do what they are good at. And you can do what you're good at. So now you actually got yourself a free employee or an employee who has as much, or an owner who has as much at stake skin in the game as you are. So having an investor who would be as invested in this business as you are, look at this baby as that big dream come true, would also be great, opportunity to bring in money and at the same time bring in someone who actually would be able to grow your business at in phases that you have not thought about.
100%. And again, I can speak from my experience. The thing is, when you're starting a business, right? Nobody's going to give you money. That's the bottom line, unless you know an investor and you have a relationship. Bank is not going to give you money because they want to see positive cash flow. That means you have to be in a business. You have to put your money for at least 2 to 3 years to get to that cash flow if you need a loan. And that's great, and that's the route I went through the business loan, and then bought another one. So you have to decide, like, investing means giving up equity. Are you comfortable with that, or no, are you ready for that, or do you want your company to grow big enough to kind of look at that before you even share equity? So again, like Jay said, look at your all the option. Regardless, without a positive cash flow, you cannot have either the investor or the loan typically, right? And I think we've talked a lot about, using taxes, right? Using tax as a growth strategy rather than just, getting the high deductible. So we have talked about that. So one of the things which helps us understand, what how to plan our taxes is, I think, the called exit strategy, which you talked about, right? Even if you never plan to retire from your business, even if you never plan to sell your business ever, like you think you're going to be doing it until you're 90 is great, but having an exit strategy, like, what would that look like? And I think that really helps with the taxes. Do you want to talk a little bit about why every business, when they're starting out, they should think about exit strategy from the day one?
Yes. This is a topic I really love, and this was the reason why we even wanted to do differently as CPAs. So when during COVID time, one of the times when you just go into different social media, you've seen these businesses go out of business because overall everything was down, economy was down, people were not walking into the stores or meeting others, and the people are also holding on to their money because they were losing jobs, so they didn't want to spend as they were spending before, which led to the businesses going out of business. So you see everywhere on social media saying, well, this is a great restaurant, an amazing restaurant, they went out of business. Or this particular glass company from whom my grandfather and father and I have built our bathrooms with, well, they went out of business. That's a very common term that's used even when people have made money out of that business, felt it was successful. That's the one common term everyone seemed to use, is that they went out of business, which is not really a very positive thing when you think about running such a successful business, having that dream come true situation. And when you close doors, the only thing people think of is like they went out of business. But what if we can think that this business is beyond one person? It's beyond one lifetime of a person, and it could keep on going. That's exactly how any of the big brands have existed. The owners don't live anymore. They lived in the 1800s or 1900s. Well, those brands still exist. That's because of seeing that business beyond yourself, or even having that additional thought that this can go to one of my children, this can go to my next of kin, they can grow it, and they can be pulled into the fact of running the business, which is never easy. Working for someone could actually be easier than running your own business. So having that mindset built into your next generation that they could inherit this someday from you, or having the fact that I could let this business have a life of its own, have an identity of its own, away, I mean, even beyond my days, is what makes it a true accomplishment to say that this baby that I gave birth to actually is going beyond generations, going beyond centuries. So for that, naturally, you need to prepare yourself to an exit. You can't work forever. You can't live forever. So when you ask a great valuation specialist, there is a multiple. If you are able to sell $1, there's a possibility. There's a possibility your business can sell for $2 because you actually are making money out of this business. There are two different kinds of businesses where you have products and you have all these procedures set out, and that can be sold. There's another kind of businesses where you are the asset yourself. The business is depending on you, like a therapist. They are depending on you to be the primary focus, and you're the reason why you're making money. We have gone through different strategies with different clients. We have sold a publishing business where they were not able to get lending before, but instead it was walked out in such a way that this person who is retiring will be in the business as an employee working part time for 2 to 3 years. That way, the buyer could procure this business and have 2 to 3 years to train themselves or train a new person to take over from this person, which is considered as an individual asset. You don't have assets to sell to another person. You are the asset itself. Instead, you can be transitioned. That's one of the a successful example that we felt that we actually navigated through a situation where the buyer couldn't get a lending process because what they were selling was not considered as something to buy from, but instead the owner was willing to stay for 3 more years, take a salaried position, and transition all that they have learned, their experience, to this new person. So that was one very successful situation. There was another one where the next generation was willing to take in, but the kid, but the son had sweat equity built in. So we did a valuation on the sweat equity for that particular person. So they were able to make a reasonable consideration to buy out the father, who is now very happily retired, and the son taking over and taking the business to the next level and into
Yeah.
the next generation.
Totally, and that's exactly, again, even if you don't plan to retire, your children will not, want your business. Like, it's fine, but have an exit plan. The worst case scenario, you sell it to someone and you still make money for all the hard work for years of all you put in. There will be someone who's going to buy your business if it's a profitable business. So
Exactly.
that's the whole thing. So, let's wrap this up. I think we gave a lot of knowledge, but we gave, talked about a lot of, but if we are to wrap up, right, like, what is that one thing you would tell every business owner when they're starting out that they must do in order to create a successful financial foundation for their business?
To me, having the right people in your back end is definitely the great way to start a business. Of course, the money is the factor which does come in. but having the right lending process. So we have communication, constant communication with your banker. Have a marketing person in strategy. Have put in words, in pen and paper, the processes and procedures that would go into your business. So you can actually give some of your control and delegate it to someone else. So that way you can go out and get more businesses. Have the right financial people, your financial advisor, a good lawyer, and a great accountant, of course.
I agree. So without a team, you cannot grow, period, right? You can have the greatest mindset, you can have all the money in the world or no money in the world, right? It doesn't matter. I think having the right team, right advisors, right, can really help us navigate those difficult situations, having the sounding board, There's not a single business who can grow without the right team. So, spot on, Jay. Thank you so much for this. So remember, your business needs to be bankable and have the right team. Like those two things will put you far ahead of any other business. It doesn't matter where they are, what they're doing. So thank you so much for coming to the podcast, Jay, and sharing all your knowledge. We are here. I'll put her link in the podcast, where she is, all of that, check her out. Her LinkedIn is lit with all the different kind of, like we talk, she talks about every single thing what we're talking about, keeps giving advice, when to become S corp, when to become this. So if you're in America and you need really like to follow someone who can give you help with your business and kind of tax breaks and the tax structure, all of that, please follow her. I will put the link in the podcast. So thank you so much, and I will see you next time.
Sounds good, Prati.
And
Thank you for
if
your
you
opportunity.
anytime, and guys, if you have questions, if you have want to know more about anything, please drop a comment and we will make sure that we'll get back to you. Okay, bye.